The real challenge in today's market is ensuring that these units serve every segment in the community.
Policymakers and developers are increasingly focused on the attainable gap. Wow, they really missed their mark there.
That is insane.
Really big news, you guys.
Welcome to DCRE News, your deep dive into high-stake world of commercial real estate. I'm Neeleen Firpo.
And I'm Niles Reyes. We're kicking off 2026 with a massive wave of activity across the capital stack, from record-breaking office recapitalizations in Manhattan to nationwide surge in industrial logistics.
Today, we're tracking the big money moves from institutional giants like TPG and Blackstone. We'll also look at how distressed legacy office assets are finding a second life through creative conversions.
And later, we'll head to the board for a full regional transaction report on the latest debt and development deals hitting the dirt. Let's get into our strategic investments.
Lennar sells majority of multifamily divisions to TPG Real Estate. According to a report by Brian Bedell of the South Florida Business Journal, home building giant Lennar Corp has finalized the sale of a majority interest in its Quarterra multifamily development division to TPG Real Estate. While specific financial terms were not disclosed, TPG has committed to a $1 billion investment into the platforms to accelerate its growth nationwide.
MCB Real Estate acquires Texas real estate firm with $575 million in assets. As reported by Melody Simmons in the Baltimore Business Journal, Baltimore-based MCB Real Estate has continued its aggressive national expansion with the acquisition of Epic Real Estate Partners and its $575 million portfolio. This deal, which includes 15 grocery-anchored shopping centers totaling over 2 million square feet across 10 states, follows a massive year where MCB has taken over management of more than $1 billion in assets nationally.
Transaction report on developments. We've seen the big money is parked, but the real activity is happening on the ground. And I hear that there's a heavy front of new projects moving in.
That's right, Naylene. We're tracking some massive developments from across the map. Let's take a look at the pipeline. Now in the Northeast, developers Bozzuto and Kimco Realty are preparing to open the Cutler Place, a $100 million luxury apartment building in Ardmore, according to the Philadelphia Business Journal. And over in the Mid-Atlantic, Atlantic Pacific Companies has been selected to lead a $140 million mixed-use project at Capitol Heights Metro Station that will replace a vacant surface parking lot with 320 affordable units and 10,000 square feet of retail, according to the Washington Business Journal. Now over down to the Southeast, Tremco Residential has officially planted its flag in Nashville, aka Music City, with a new local office led by no other Mr. Peter Davis, reported by the Nashville Business Journal. A new medical office project next to Broward Health Medical Center is moving forward after the Centurion Foundation secured a $138+ million construction loan to develop the 8-story, 188,000 square foot facility, which will be leased back and operated by Broward Health upon its expected completion in 2027. Now, in the south central part of the map, Tremco Company has filed plans for a $40+ million expansion of its 35 Eagle Industrial Park in North Fort Worth, which will add 3 speculative buildings totaling approximately 747,000 square feet to a development that already encompassed nearly 6 million square feet, as reported by Seth Boney in the Dallas Business Journal. Now, staying in Texas, really big news, guys. The Rockefeller Group has completed and sold its first Houston area industrial development, the East Bay Trade Center, a 557+ 1,000 square foot cross-dock warehouse complex in Baytown that was acquired by Gulf Coast Crating Incorporated immediately upon completion, according to the Houston Business Journal. In Colorado, a joint venture between PCCP and Confluent Development has broken ground on a 125,000+ square foot speculative warehouse targeting the West Denver submarket that currently boasts a record low 1.7% vacancy rate, per the Denver Business Journal. Now, moving further west, in LA, a joint venture between High Street Residential and Haseco North America has acquired land for Jules San Pedro, an 8-story, 281-unit apartment project, which is expected to break ground this quarter and deliver by the second quarter of 2028. Now, that's it for transaction reports on development projects. Now, back to you, Naylene.
Demolition permit filed for East Columbus Apartments target for $150 million redevelopment. According to reporting from Leslie Camey of Columbus Business First, Nuveen Real Estate has moved forward with a massive $150 million redevelopment project in East Columbus. The firm firm recently filed a permit to demolish the 2 existing towers at 525 Sawyer Place, formerly known as Latitude 525. Originally built as a public housing in the 1960s, this site will be cleared to make a new 380-unit affordable housing complex consisting of 8 separate buildings.
Boston's office conversion program eyes 1980s high-rises. In a report from Grant Welker for the Boston Business Journal, Boston's office to residential conversion program is reaching a new milestone as it begins to attract 1980s vintage high-rises. While earlier projects focused on smaller, century-old buildings, larger towers are now becoming viable candidates, a key driver in the city's incentive of a 75% tax abatement for 29 years. The head of the program expects the city to reach 2,500 units across 2 million square feet of converted office space by the year end 2026.
We've seen the physical transformation of these assets, but the real challenge in today's market is ensuring that these units serve every segment in the community.
Exactamente. Policymakers and developers are increasingly focused on the attainable gap. For a look at the projects and legislation aimed at fixing the housing crisis, let's move into our segment on affordable housing.
Lincoln Avenue Communities closed on Albuquerque's former Wells Fargo towers for conversion. In a major win for downtown Albuquerque, Lincoln Avenue Communities have closed on the purchase for the 13-story former Wells Fargo tower, with plans to convert the office building into 100 units of affordable housing while maintaining its existing bank services. Reported by Cooper Metz of Albuquerque Business First, the 18th-month redevelopment is expected to break ground in May 2026 and is currently seeking a $2 million city grant to help bring the project to fruition. Transactional report acquisitions. It's inspiring to give updates on affordable housing, but let's see where the rest of institutional capital is landing this week. Let's head over to Niall Reyes for the transactional report acquisitions.
Thanks, Nailene. From senior living communities to massive industrial portfolios, the acquisition market is heating up as capital seeks out stabilized, high-demand assets across the country. In the Northeast, National Health investors paid $50+ million for the 107-unit Bridges at Warwick Senior Living Facility in Jameson, Pennsylvania, as part of a larger $89.2 million for-property investment, according to the Philadelphia Business Journal. L&B Realty Advisors acquired the Granary, a 229-unit apartment building in Philadelphia's Logan Square neighborhood, for $82.4 million, representing a 31% discount from its 2013 trade price. Also, PBJ reports that Wilmington-based Capano Residential has entered the Philadelphia market with a $23.7 million acquisition of Rittenhouse Row Apartments, an 80-unit Center City building slated for $2 million in renovations. Now, heading over to the Mid-Atlantic, the Silverman Group has acquired a massive 50-building industrial portfolio spanning 1.4 million square feet across Maryland and Virginia for $203 million, according to the Washington Business Journal. Now, over in the Southeast, North Carolina-based Bell Partners has expanded its Florida footprint with the $111+ million purchase of the 350-unit Trelago Apartments in Maitland, as reported by the Orlando Business Journal. Also, in Charlotte, Blackstone Incorporated had added 20.5 acres across 2 industrial sites in the Sugar Creek neighborhood to its portfolio for $32.7 million, according to the Charlotte Business Journal. Now we're heading over to the Midwest. And in the Midwest, American Healthcare REIT has acquired Tylermore Senior Living, a 200-unit facility in Woodbury, Minnesota, for $88 million in a deal representing one of the region's largest transactions of 2025, according to the Minneapolis and St. Paul Business Journal. Ervo Square and Matrix Group have partnered to acquire a 10-building, 257+ square foot industrial portfolio in Inglewood for $33.5 million, according to the Denver Business Journal. Now, heading out further west, PGIM Real Estate has purchased a 215,000 square foot Class A warehouse within the Newark Distribution Center for $78 million as demand for East Bay logistics remains high. Now, that was reported by the San Francisco Business Times. As well on the West Coast, Morgan Stanley Investment Management has acquired a 290,000 square foot advanced manufacturing site in Fremont, leased to Western Digital for $110 million, driven by surging demand for AI-capable facilities, according to the Silicon Valley Business Journal. That's all we got for acquisitions right now, Nailene. Back to you in the studio.
32-story office building at 1700 Market to be put up for sale amid foreclosure case. According to the report from the Philadelphia Business Journal, the prominent 32-story office tower at 1700 Market Street is officially hitting the open market as owner Shorenstein owes more than $186.7 million on the loan that default in February 2024. The property's financial health has deteriorated as occupancy fell to 72% by late 2025, significantly missing the 88% target established when the $188 million mortgage was underwritten in the early 2022.
Wow, they really missed their mark there.
Well, duh.
Vision and Beyond founders indicted in alleged multi-million-dollar fraud conspiracy. Writing for the Cincinnati business carrier, Nick Swartzwell reports that the federal grand jury has indicted Vision and Beyond founders Stats Greenberg and Peter Gesunterman on charges including conspiracy to commit bank fraud and money laundering. The indictment alleges the pair mortgaged 60 investor purchase properties for $36 million and fled the country with the proceeds, leaving behind abandoned buildings where tenants now endure hazardous conditions like collapsing ceilings and severe sewage leakage.
That is insane. Vacate former GSK building at the Navy Yard sells for $52 million. As reported by the Philadelphia Business Journal, the Eastern Atlantic State Regional Council of Carpenters purchased the vacant GSK headquarters for $52 million, a price representing a 60% discount from its 2018 trade. After the property fell into receivership following a $78.5 million foreclosure judgment, the union now plans to relocate its headquarters to the site and develop a new training facility on the existing parking lot.
Foreclosed downtown Denver tower sells for a fraction of previous sales price. As reported by Katie Shershire in the Denver Business Journal, local investor Craig Clark has acquired the Trinity Place office tower at 1801 Broadway for $6 million following a foreclosure proceeding. The 17-story tower previously sold for $40 million in 2019 to a co-working firm, Expansive, meaning Clark acquired the asset for just 14.9% of its prior valuation. The property faced significant financial distress, including 60% vacancy rate and over $8.9 million in owed overages and deficiencies at the time the lender, Lone Core Capital, repossessed the asset.
Transaction report on debt. We've seen the physical transformations on the legal drama, but it all comes down to the capital that makes these deals possible. Niles, what is the current climate looking like in the debt market?
It's a high-pressure environment, Naileen. We're tracking some record-breaking liquidity moving through the Mid-Atlantic and some significant refinancing activity in the South. Here's your debt outlook. Now, in the Northeast, related companies and Oxford property groups closed a massive $2.4 billion capitalization for 70 Hudson Yards, which includes a $1.6 billion construction loan led by Wells Fargo, Bank of America, and Standard Chartered. As well in the Northeast, Brandywine Realty Trust secured an $87+ million CPACE loan for its mostly vacant life science tower at 3151 Market Street in Philadelphia, marking the largest CPACE deal in Pennsylvania history. Now in the Mid-Atlantic, Post Brothers revived DC's largest residential conversion by securing $465+ million in CPACE financing for the Geneva, a 500-unit project at 1825 and 1875 Connecticut Avenue Northwest. Now going further south on the Southeast, AJ Capital Partners closed a $475 million construction loan from Barings for Bellamede Village, a 15.5-acre mixed-use development at the entrance of the established Nashville neighborhood. Now heading out west, Fortress Investment Group acquired a $348 million loan backed by a portfolio of nearly 900 apartments in San Francisco that was previously owned by Goldman Sachs. Private investment firm CM Capital secured a $200 million refinancing from Brothers Say Life for 525 University Avenue, one of Palo Alto's tallest office towers, following significant renovations. Now that's our debt outlook, Naileen. Back to you.
Looking at the board today, it's clear that while the fog of high borrowing rates hasn't fully cleared, the industry's largest players are no longer waiting on the sidelines.
Exactamente, and the conviction is increasingly focused on two things: infrastructure and affordability. From medical office in Florida to affordable transit-oriented housing in DC, the most successful projects at the start of the year are those that solve structural community needs.
The bad acts we discuss in our Bad Boys segment are a reminder that in a high leverage environment, accountability is everything. But in Pennsylvania and DC, hitting record C-PACE numbers, we're seeing new sustainable paths for capital to flow.
I'm Nailene Firpo.
And I'm Niles Reyes. Thanks for joining us at DCRE News. We'll see you next time.